Hello guys, this is Jaisal Bhatia, co-founder of Equwise. So this video is all about for those positional people, okay, or traders who want to do positional trading, okay, or who's just starting. So this video is for them so that you can make sure that you don't do 90% of the mistakes that usually people do, right? Now, before I start, I would want to show you something, right? So if you are someone who wants to get into this positional trading, okay, in a very safe manner and want to, generate some good amount of money, I have something for you. So over here, okay, so this is our EQWise website, okay. So over here, if you are someone who is interested, okay, you can definitely just go to services. And over here, what you can do is you can check this thing out. Okay, this is the Aqua service. Okay, and it has a holding time frame of maximum of 1 year. Okay, and the target that we will be doing is 40%. Okay, if you have any doubts, okay, reach out to us on this WhatsApp. Okay, and we will be there. Right. So let's get to the learnings. Okay, so now let's say I give you 1 lakh rupees. Okay. Now your aim is to make it zero through positional trading. How will you do that? It's very simple, right? So if you ask me this question, practically speaking, so what I will do is I will take my entire money, the whole capital, and I'll put it in one stock. Okay. And then the second bad luck that can happen to me is um, I chose a poor quality stock. Okay. Then the third thing that can happen, even more in the bad side or the worst side is that market started falling. Okay. So with these three bad stuff, if it happens, okay, it's very easy to, reduce your whole entire capital down, right? Yeah. So now let's say how do we battle it? Okay, how do we play the positional game really well? Okay, so the first thing that you need to learn is position sizing. Position sizing is very, very important. Okay, so if let's say if I give you 1 lakh rupees, okay, usually what people do is they put either entire 1 lakh rupees or 50,000 or 30,000 of it. Okay, and then what they do is they let's say have a target of 20% or 30%. Okay, and they will by mistakenly choose a poor quality stock. Okay, and then what happens, the price, let's say if it goes up and hits the target, well and good, fine. Otherwise if it goes down, okay, then what they do is they say we will just leave the stock. Okay, so now if you are someone who has this indisciplined way of playing the markets, for example you bought it at 100, your target is 130, let's say 130 happened, you exited. Second time when you tried, it did not go to 130 and it started falling. Okay, and you don't have a stop loss in the system and it continued to fall. Okay, that time what will happen, you guys will turn into investors naturally. Okay, so if you have this kind of mentality, okay, position sizing is a very big game changer for you. Okay, so let's say you have 1 lakh rupees. Instead of parking entire 1 lakh in one stock or 50,000 in two stocks, okay, it's better you go for 1% to 2% of your entire capital. Okay, so instead of putting 100% or 50% in one stock, you bring it down to 1% or 2%. Okay, now what happens, let's say, of course, it's not that easy to become a good analyst or something like that. It takes time. Okay, until we get to the point where we can choose good companies or good quality stocks. Position sizing will help you learn throughout the journey while making profits here and there, right? So the first point is position sizing. This is super duper important because even if you are a person who is not disciplined, who has emotional swings, okay, who take trades based on emotions, tips or something like that, over here, position sizing will help you come out of a bad trade easily. See, one thing understand, if it is going to make profit, it will anyways make profit, right? But if something is not going to work, you should know how to come out of it. Okay. So position sizing, right position sizing will always help you. Okay. So the first point that you guys need to understand is position sizing. Okay. Do not park 50%, 80%, 100% of the entire capital in one stock. Okay. Play it well. Put maximum of maybe 3 or 4% in one stock. Okay, don't take one bets, take many number of bets. Okay, now see, there was a time where I had actually worked for a casino. Okay, and the challenge from the casino was, I need to make a mathematical game through which I can crack roulette. That means I can start making money from roulette. Okay, so the things that I tried, it's maybe 10 spins or 20 spins or 30 spins or 40 spins, I will make money. But as the spins increase, okay, it keeps going down and finally it starts going into the loss. Okay, so if you are someone who's into positional trading, you are not going to take 10 trades in your entire life, or 20 trades or 30 trades or nothing like that. You're going to cross 1000, 2000, 3000, 5000 number of trades in your trading lifespan, right? So always understand, you have to play it in a way, because mathematics is always going to chase you. Okay, if you're going to do something wrong, it may work now for the next 10 trades or 20 trades or 30 trades. At the end, when the number of trades starts to increase, the reality will start coming out. Okay, so this kind of scenario, if you want to handle it, position sizing is the key. Okay. Second thing, nowadays there's a concept that has come, is margin trading facility, right? MTF. Okay, this is where the leverage comes in. Okay, even what do you call, the biggest investors of all time has also said this: stay away from leverage, right? Sir Warren Buffett has told, right, stay away from leverage. So again, this is like the sub explanation of the first point. Okay, so in, if you use leverage, what happens is, again, let's say your capital will be the same, but the effect will be different. I'll explain how. So for example, let's say the MTF is giving you 4x leverage. So let's say you have 1 lakh rupees. Even if you're taking 1%, okay, of 1 lakh rupees, and you're putting it through leverage, okay, but the effect will be of 4x. That means 4% of your account. So technically, you will be playing with 400% of your capital. Okay. So any move will happen not as per 1 lakh rupees, it will happen as per 4 lakh rupees. Okay. So that is the problem with MTF. So don't use MTF, don't use any kind of leverage given by any brokers. Okay, because this is not such an easy game. Okay, if you do that, first of all, you will be even charged interest on it. Okay, it will be point something per day, but at the end, if you just do it for like 365 days, it will hit more than 13, and it will be somewhere around 15% per annum. That's equal to taking a loan and then playing with that, right? That is wrong. So first point, position sizing. Second, MTF. Don't use MTF. Okay. Third thing, people don't have a positive money making system. Okay. They have negative money making system. I'll explain you what is that and how is it. Okay. Now, let's say your accuracy, you take, let's say, 10 trades. Okay. Your accuracy is only 5. That is 50% of the times you win. Okay. Now, the risk reward ratio that you usually maintain, or you are able to maintain, is 1:2. That means whenever if it goes to the loss, okay, you exit with 1 rupee loss, and whenever it goes to profit, you try to take 2 rupees, or end of the execution, you take 2 rupees and you go home. So over here, 1:2 is the risk reward ratio, and your win rate is 50%. Okay. So that means 50% you lose. So 50 into 1 rupee you lose, 50 rupees you lost. Okay. Again, 50% of the times you win, and you win 2 rupees. So 50 into 2 is 100. 100 minus 50 is 50. So over here you have generated positive money. That's a positive cash flow. end of the result, right? So people don't understand this thing that they need positive money making model to generate money across any place. Forget trading, it's anywhere. Okay. If there is a minus, of course, you're not making money, you're losing money, right? So over here, you need to focus on positive money making systems. System, I mean literally systems. That means you have a perfect execution plan. I'll do this. If this happens, I'll do this. If that happens, I'll do that. Things like that. Okay. Now, in this, okay, in this money making system, okay, you need to understand that you need something through which you can control your emotions. Now, let me tell you something. Let's say you have 1 lakh rupees, okay, you park your entire 1 lakh in a stock, okay, 5% the stock jumped up, okay, you will see a 5,000 profit. You will feel, man, अरे यार ये तो सुपर स्टॉक है, सुपर प्राइस है, मस्त प्रॉफिट आ गया, लेट्स एग्जिट. Okay, so you will try to exit with 5,000 profit. Now let's say the story takes a downhill, right? So market is bearish, so entire market is falling. Now what happened? Instead of what do you call, you invested 1 lakh rupees and the stock started to fall, and now you're seeing 10,000 rupees as loss. Okay, now over here, the first mistake that you did is your emotions came into picture, because of which instead of taking a bigger profit, you exited with 5,000 rupees only. Okay, this 5,000 rupees of profit is fine if you can close the loss at around 2,500 or maybe below that. Okay, that's where 5,000 rupees of target is still fine. But usually what people do, 5,000 profit, but when it goes in the loss, they don't exit with stop loss. Okay, they are highly leveraged. Okay, and they invest a lot of things in one stock. Okay, so the position sizing is big, and because it's going down, the loss is big. Now what they do, either they exited with a big loss. Now let's say they exited with 10,000 loss and 5,000 profit. Where's the money making? There's no money making, right? So this is one issue. Second thing, FOMO. They bring FOMO. Now what FOMO means? FOMO means fear of missing out. Okay. So let's say XYZ gave a stock, you heard a tip or something like that. Okay. Now they will create an urgency telling that, if you don't buy now, it's going to shoot up really high or something, or maybe you saw it on news. Now you feel like if you don't buy now, you can never get it at this price. But believe me, this is market. Every day there are opportunities. Okay. Every day there are opportunities. Definitely at least one opportunity you can get it in a year. Okay, the most humble number I'm giving you. One in a year you can easily get. So don't think that, if I don't invest now, I'm gonna miss something. It's not gonna happen like that. Okay. So you need to focus on positive money making system wherein you don't use emotions. So if you are going to be high on positions, okay, that time what happens is your emotions are easy to come out and disturb your trading mathematics. In the sense, you will plan, you will do your own research. You will find out that 50% of the times my game works, 50% of the times it doesn't work. When it works, I'll make 2 rupees. When it doesn't work, I'll lose 1 rupee. This is the historical whatever you have cross checked. Okay, now what happens when you are trading, okay, with huge quantity? I'm not against huge quantity, I'm against huge percentage of whole capital. Okay, that is what I'm against of. Okay, a good risk management system is very very important. Okay, so now when you are high on percentage of portfolio, okay, high on positions, that time in the practical world, I'm telling you, forget the book knowledge and all. In the practical world, you will become scared. You will not be able to sleep at night. Okay, and things like that. A lot of things will happen in your head. Okay, so if your position sizing is perfect, okay, these emotions will not come out. It will not disturb your trading mathematics. Okay, this is what I mean by positive trading model, trading system. Okay, so wherein your emotions don't disturb your maths and the whole system works like a robotic system. Okay, that's what I mean. The fourth thing is a bit crucial, but it will take time for people to reach there. But yeah, if they need, they can even take external help, okay, of a registered analyst and things like that. They can take their help as well. Okay, this fourth point is called as stocks quality. Now I'll tell you something. So, for example, you take a stock which is of good quality, okay, you bought it, and then market started falling. Okay, now what will happen? Okay, when the market actually, when it is booming, even though if it is a poor quality stock, that will also go up. Okay, but when the market falls, that's where the real test happens. So when the market is falling, okay, most of the stocks will fall. It does not matter whether it is a good quality, bad quality, whatever it is, maximum will fall, will have a bearish biasness in that. Okay, it will have in them. Now, when the market is falling, your stock will also fall. But there will be a point where the market will start to rise again. So when that happens, the first stock that will shoot up is a quality stock. Okay. So if you do not get to enter into a quality stock, okay, your stock is not going to rise back that easily. Okay, it is going to stay there, it's going to remain just like that. You are going to waste a lot of time, energy, and emotions on it. Okay, so that's why I say that in your learning phase, always park 1 to 2% of it in the stock. Okay, do not go more than that. Take more number of trades. That's how you will learn in the entire journey. Okay, and let's say if you are someone who wants to skip the learning curve and straight away get to the execution, you can definitely reach out to us. All the link is in the description. Check that out and get back to us. We are always there to help you guys. Okay. So that's it, guys. These are the four main points because of which 90% of the people lose money. One of those main points, right? Of course, there are many more subheadings and headings in that. So these are the four main things which I feel is very, very important. Position sizing, positive money making model, staying away from MTFs. Okay. And the fourth thing is stocks quality. Okay. If your stocks quality is bad and if your position sizing is good, you may still make money. Okay. Because you're low on entire capital. Let's say if you risk 1% of your entire capital. Okay. Even if stock falls 50%, it is only 0.5% of your entire capital. You get it? And you get so many other turns to do it. If you're right, if your logics are right, it's going to work with all the stocks or maximum number of stocks. But if your logic is wrong, it's going to go the other way, right? So that's why position sizing is super duper important. Okay. So that's the main thing that I'm focusing, guys. And um, also, when it comes to make positive money making model, if you are someone who's going to risk more amount of uh, percentage of your capital, definitely stop losses are super important. You cannot become emotional with that, and you cannot disturb it. Okay, so uh, in the system, always have a proper target, proper stop loss. Understand the probabilities of your target getting hit, understand the probabilities of your stop losses getting hit, and play accordingly. Okay, so that's it, guys. That's all for now. Okay. Uh, just click the subscribe button if you want more and more of practical knowledge and experiences from someone who's been into the market for more than a decade or a decade, right? So, yeah, and all the links are in the description. Okay. So, see you guys. See you in the next video. Bye bye.